Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, February 7th, 2018, and people, the Wall Street Wizards are at work again. Good. Awesome. That means that you and me, again, we're not going to let them win. We're going to beat them at their own game. It's that simple. As I'm doing this video blog, stocks are up across the board. The Dow Jones Industrial Average is up almost 200 points. However, stocks opened up in the negative after yesterday's big run higher. Now, all well and good. This just looks great. Oh, by the way, I just opened up a new position here. SPY, April in the money calls. I'm up about 6% in about 10 minutes already. We'll see how this plays out through the rest of the day. I did post this position all over my social networks. I hope you follow me along with me. I also hope you're watching this on my website, because I'm going to talk about the charts that are on my website right now. So, if you were to look at the bond market chart, go have a look at it, right side of the page there, you are going to see that the bond market is stable. Now, it needs to stay here. As a matter of fact, I wrote an article on Steam It last night where I spoke about there is clearly a red line in the sand with regard to bond yields. We've seen how it's been affecting the markets, no doubt about it. We have to watch this, and you know how important it is. I believe if we see the U.S. 10-year yield move over 2.8 or so, there's going to be trouble. But I believe, again, that the banks, the Federal Reserve, are going to do what they need to do to keep bonds stable, because they have seen what has happened as of late. And again, they drove this, okay? There's no doubt whatsoever in my mind that this market is being weaponized. There's no doubt about it. It's a political tool. They're going to keep stocks moving higher in this environment now. The dollar right now, it's up fractionally. This will not last. Mark my words, this will not last. They have to keep bond yields about where they are and the dollar about where it is and weaker in order for stocks to move higher. I don't care what earnings are coming out, because it doesn't matter. You understand that, right? You see all this good economic news we were getting, all this these good earnings reports. Didn't matter. The market plunged. Why? Because of the bond market. Because it's fake. I know you get that. It's unbelievable. So again, the other dynamic that I've been talking about is the cryptocurrencies. Cash going into cryptocurrencies is stock market positive. And that's what's going on right now. Again, look at the charts on my website right under this video. You will see a couple over there to the right as well. Look at those charts. Look where the flow of cash is going. Very simple. I'm going to make this so easy for all of you. You're all going to be rich in a very short period of time if you play this game correctly. You're patient, and you just let things come to you. All right? Don't try to second guess things. Don't jump on top of things because the crowd is going there. Just wait. It doesn't matter. There's always opportunity. Don't sit back and say, "Oh, I wish I would have done that. Oh, I wish I would have done this." No. Even if you miss the greatest opportunity, there's going to be another one. There's no doubt about it. This is the way this is. So we always look for the right time to strike. We play this smart. We know what they're going to do. We know what their gameplay is. Again, that big, huge sell-off, 1,600 points in the market, was to shake out the weak hands. And again, now that all those weak hands are out, well, strong hands are in the market, and they're going to be adding to those positions. What a great way to push this market ever higher. So again, President Trump can use it as his political tool, because that's what he's been doing. And that's good. Let him do that, because we're going to ride those coattails. We're not going to be fleeced. There is no way, none, that you and I are going to be fleeced. Anyway, that's pretty much it. Gold and silver are up a little bit right now. They fell under a lot of pressure because of the dollar lately. look, they play their game, we're going to play ours. We're going to use this as an opportunity to bet against the debt, become our own central bank. These are long-term investments. I can't stress that enough because people still write to me about it. I don't even barely talk about it anymore because it doesn't matter in my view what they do to gold and silver here. I don't care. I don't care at all. And neither should you, because you understand they are going to explode the global debt. It's never going to stop. It's never going to be paid back. The debt is a liability. It's not an asset. You know that. All right, look. So I don't run off at the mouth anymore. I'm going to let you all go. And we are going to sum all this up at the end of the day. One more thing before I let you go. And I said this yesterday, but I got even more questions about this. Forget about what the stock market's doing. How many of you heard me say that? If you want to know where the stock market's going to go, you need to look in other places. You can't look at the stock market to tell you where it's going to go. You got to look at the bond market. You know that if you follow this blog. And now you got to look at cryptocurrencies too. Cash moving into cryptos is stock market positive. Period. All right, with that said, I'll see you at the end of the day. Over and out.